Money was never just money. Most people think wealth is simply about having more money, a bigger paycheck, higher income, luxury cars, expensive houses, designer clothes, vacations. But the rich rarely see money that way, because money itself was never the ultimate goal. Money was always a tool, a system for acquiring assets, creating leverage, buying time, controlling risk, generating cash flow, multiplying opportunities, purchasing freedom. And once you understand how wealthy people actually think about money, you begin realizing something uncomfortable. The rich don't merely have more money. They use money differently. Because most people spend money. The rich deploy money. And that difference changes everything. Because in modern capitalism, wealth isn't determined by how much you earn. It's determined by what your money does after it reaches you. Most people are trained to consume from childhood. People are taught one thing: study hard, get a job, earn money, buy things, upgrade lifestyle. Repeat. The system rewards consumption. Advertising encourages consumption. Social media glorifies consumption. Entire industries exist because people consume. And consumption feels rewarding. New phones, better cars, luxury brands, bigger apartments, fancy restaurants, temporary pleasure. But there's a hidden problem. Consumers exchange money for experiences. Investors exchange money for assets. And assets behave differently. Assets continue working, long after money leaves your hands. Most people spend money to impress others. The wealthy spend money to acquire systems. Systems that continue producing income. Because rich people understand something most people never learn. Money is labor. Stored labor. And once you spend stored labor, it disappears forever. Unless that spending creates more labor in return. The middle class buys liability. The middle class often believes they're buying assets. But many things that look like assets are actually liabilities. Luxury cars, expensive watches, large houses, designer clothes, new gadgets, monthly subscriptions. None of these generate cash flow. They consume it. And because lifestyle inflation feels normal, income rises. But expenses rise even faster, which creates a trap. Higher salary, bigger mortgage, higher insurance, more payments, less freedom, more stress. Because liabilities demand attention. Assets provide freedom. And wealthy people understand this distinction deeply. They ask, will this put money into my pocket? Or take money out? That one question changes behavior. Again, and again, and again. Chart. The rich buy cash flow. Most people work for money. The rich buy things that work for money. Businesses, stocks, real estate, royalties, private investments, intellectual property, digital products, cash-producing assets. Because wealthy individuals understand something extraordinary. Income from labor is limited. Income from assets can scale. There are only 24 hours in a day. But assets don't sleep. Businesses operate. Dividends arrive. Rent gets paid. Investments compound. Licensing agreements generate revenue. Software continues selling. Books continue earning. Money keeps moving, even while they sleep, which creates a completely different relationship with work. The rich are not obsessed with working harder. They're obsessed with making capital work harder. They value ownership over income. Most people chase raises. The wealthy chase ownership. Ownership changes everything. Employees earn salaries. Owners earn upside. Employees trade time. Owners accumulate equity. And equity compounds. Jeff Bezos wasn't paid billions. He owned Amazon. Mark Zuckerberg wasn't earning billion-dollar salaries. He owned Meta. Warren Buffett didn't become rich through paychecks. He owned businesses. Ownership creates leverage, and leverage creates scale, which is why wealthy people constantly ask, how do I own more? Instead of, how do I earn more? Because income pays bills. Ownership creates wealth. The rich think in decades. Most people think monthly. The rich think generationally. Most people ask, can I afford this today? The wealthy ask, will this matter 10 years from now? Because time amplifies everything. Small advantages become enormous. Small mistakes become expensive. And compounding requires patience. But patience is rare. People want quick results. Instant gratification. Fast success. Immediate rewards. The wealthy understand that compounding looks boring, until suddenly it looks miraculous. Warren Buffett earned most of his wealth after age 60, not because he became smarter, but because compounding had decades to work. Time is the invisible engine of wealth, and the rich protect it aggressively. Traum. They buy time. Perhaps the greatest luxury isn't yachts, or mansions, or private jets. It's time. Because time is irreversible. Money can be recovered. Time cannot. The wealthy understand this, which is why they use money to eliminate friction. Assistance, automation, teams, software, delegation, convenience. They buy speed. They buy focus. They buy freedom. Not because they're lazy, but because time invested into high-value activities generates greater returns. Meanwhile, many people sacrifice thousands of hours to save tiny amounts of money, without realizing they're trading the most valuable resource they possess, their lives. And debt becomes a tool. Most people fear debt, and often for good reason. Consumer debt destroys wealth. Credit card debt, car loans, lifestyle financing. These create pressure. But wealthy people distinguish between bad debt and productive debt. Because debt itself isn't evil. Unproductive debt is. The rich use debt to acquire assets, businesses, real estate, investments, expansion, cash-producing systems. And when assets generate returns greater than borrowing costs, debt becomes leverage. Leverage magnifies outcomes, both positive and negative, which is why wealthy people respect leverage. But they don't avoid it. They understand it. They don't buy status first. Most people buy status, then try to build wealth. The wealthy often reverse the process. They build wealth first. Status comes later, because appearances can be expensive, and appearances don't compound. Reality does. Many millionaires drive ordinary cars, wear simple clothing, live below their means, not because they can't afford luxury, but because they understand opportunity cost. Every dollar spent on status is a dollar that cannot compound. And compounding eventually buys more freedom than appearances ever could. Marr. They see money as soldiers. Imagine money as soldiers. Most people send soldiers away permanently. Vacations, luxury purchases, impulse spending, entertainment. The rich ask something different. How many soldiers can I keep alive? How many soldiers can I send out and have them return with reinforcements? Because every dollar invested becomes another worker, another producer, another engine. Eventually, those soldiers create armies, and armies generate wealth. without requiring endless effort. They understand opportunity cost. Every purchase has a hidden price. Not just what it costs today, but what it could have become. $1,000 invested at 10% annually becomes thousands more. Over decades, small decisions compound. Repeated spending compounds. Repeated investing compounds. Everything compounds. Which means opportunity cost is invisible, but incredibly powerful. And wealthy people think constantly about alternatives, not simply prices. Because the question isn't, can I buy this? It's, what am I giving up by buying this? The rich buy education differently. Most people stop learning after school. The wealthy don't. Books, courses, mentors, networks, experiences, masterminds, advisors. They invest heavily into knowledge, because knowledge increases earning power, decision quality, risk management, opportunity recognition. And unlike material possessions, knowledge compounds internally. Nobody can take it away. Which is why many wealthy individuals spend far more on learning than on luxury. Because they know better decisions create better outcomes. Networks create wealth. Opportunities rarely arrive randomly. They arrive through people, relationships, introductions, trust, reputation. And wealthy individuals understand this deeply, which is why they invest into communities, partnerships, friendships, collaborations, reputation. Because networks create leverage. One conversation, one introduction, one partnership can create millions, and no algorithm can replace trust. The biggest difference is emotion. Perhaps the greatest distinction isn't intelligence, or talent, or luck. It's emotional control. Most people become emotional with money. Fear, greed, envy, impulse, comparison, panic. The wealthy train themselves differently. They think probabilistically, long-term, rationally. Because wealth isn't destroyed by mathematics. It's destroyed by emotions. Panic selling, impulse buying, lifestyle inflation, social comparison, and mastering emotions becomes a competitive advantage. Again, and again, and again. Money amplifies who you already are. Money doesn't change people. It amplifies them. Generosity becomes larger. Greed becomes larger. Wisdom becomes larger. Foolishness becomes larger. Because money is leverage, and leverage magnifies character. Which is why financial success alone doesn't guarantee happiness, or meaning, or fulfillment. Money solves money problems, but purpose remains separate. And many wealthy individuals eventually realize this, after spending decades chasing numbers. The system rewards capital. The uncomfortable truth about capitalism is that labor alone rarely creates extraordinary wealth. Capital creates extraordinary wealth. Capital owns businesses. Capital owns real estate. Capital owns stocks. Capital owns systems. And systems generate income. Again, and again, and again. The wealthy understand this, which is why they focus on accumulating capital. Because eventually, capital works harder than humans can. The real difference isn't money. The real difference between the rich and everyone else isn't intelligence. It isn't talent. It isn't luck. It isn't even income. It's philosophy. Because most people see money as something to spend. The wealthy see money as something to multiply. Most people consume first. Invest later. The wealthy invest first. Consume later. Most people buy liabilities. The wealthy buy assets. Most people work for money. The wealthy make money work. And over decades, those tiny differences become enormous. Because wealth compounds. Knowledge compounds. Ownership compounds. Relationships compound. Time compounds. And perhaps that's the biggest secret of all. The rich don't necessarily have better money. They simply use money differently. Because money itself was never the real asset. The real asset was understanding. Understanding how to convert income into capital, capital into assets, assets into cash flow into freedom, and freedom may be the most valuable form of wealth that exists. The dark truth about money, the dark truth about wealth, is that the rules are often invisible. Schools teach people how to earn money, but rarely how to multiply it. Society teaches consumption. Advertising teaches desire. Social media teaches comparison. Very few institutions teach ownership. Very few teach compounding. Very few teach leverage. And that's why many people spend their entire lives chasing income without ever building wealth. Because wealth isn't just about earning, it's about understanding. And understanding changes everything. Because the rich don't merely possess money, they possess systems. And systems create freedom. Subscribe to Wealth OS for more documentaries on wealth, power, media psychology, creator empires, AI, and the hidden systems shaping modern culture.